Today we're going to look at the debtors and creditors control accounts. And so we are going to do posting from the subsidiary journals to the control account as well as the individual accounts. Now we were last doing the debtors journal and the cash receipts journal, which would include transactions that has to do with the debtors. Now, we are going to post to the general ledger where we will find the debtors control account. And the debtors control account consists of the total amounts from the debtors columns from our subsidiary journals. So let's first look at that. So the debtors control account and the creditors control account, the layouts we will learn from the notes that is given. But the posting works like this. We will look at the debtors column that needs to be posted. This total here needs to be posted. And when we look at the debtors control account, we will interpret they owe us more with a plus, they owe us less with a minus. So I'm going to post this 3,000 from the debtors column, from the debtors journal. And in this journal, the debtors, we sold goods to the debtors on credit. So basically, they owe us more. So it's going to be recorded in the debit side, in the debtors control account. It comes from the DJ, and that is the description, the other account involved. From the cash receipts journal, what happened here is that I received payments from my debtors. So here they owe me less. The total is being posted to the debtors control account. So we will look at the debtors and we will take that 800 posted to our debtors control accounts. Then we will balance off. We see which side is the most. It looks like the debit side. The totals must be the same. So here missing amount 3,000 less than 800 gives me 2,200. We bring the balance broad down on the opposite side. Also, our debtors and creditors needs to be posted twice. First in the control account, which is the total account, as well as every single individual account. So with the individual accounts, that is recorded now in the debtors ledger, that's what we call it, where we record the list of the individual accounts. We will do the same as we've done in the control account, but just with individual amounts for the individual debtors. So still it goes, they owe me more on the debit side, they owe me less in the credit side. So when you look at your subsidiary journals now, we are going to use, again, from the debtors columns now, but these individual amounts. So again, the debtors column, but the individual amounts. So when we go to the individual accounts, here is Joost. From the DJ, we sold to him for 1,000 and we received from him 3,000. And again, we balance off the account like always. For debtor Piet, the same. We've sold to him for 2,000 and we received from him 500. And we will balance off the account. When we look at the balances now that's been brought down, we will compare the debtors ledger with the general ledger, the debtors control account. Well, here we see the balance brought down 2,200, and here we see 700 plus 1,500 gives 2,200. So the balance on the control account and the balance on the individual account must correlate and must be the same, because basically what we've done the same transaction twice. First in the debtors control account, and second in the individual accounts. So the balances brought down must be the same. So this is posting from your subsidiary journals to your debtors control account and to the debtors ledger, the individual account. And so the same is going to happen with the creditors control account. First, we will post from our creditors journal the creditors column total as we have purchased on credit. And then we will also post the creditors column of the cash payments journal where we have paid them. So this we do again in the control account, in the general ledger. So again, we interpret the creditors control account. I owe them more, I owe them less. So here I have purchased, and we look at the creditors column, I have purchased in total on credit, so I owe more. And here I have paid them, I've paid the creditors, so I owe them less. Again, we balance off and the balance is brought down to the opposite side. Again, it's going to be posted now individually. We look at the creditors column again, individual amounts being posted to the individual accounts. Again, it stays the same as the general ledger. It's just now been recorded in the creditors ledger, which is the individual or list of individual accounts. Again, we interpret, we owe them more, the individual amount, and we owe them less as we have paid Baloy. And the same with Moses' individual amount from the creditors column. We owe them more. Here we've purchased on credit, and here 5,000 we've paid them. And that is credited Moses, and so I owe him less. Again, we balance off the accounts, and the same, the balance brought down from the individual accounts, 1,250 plus 2,500 gives 3,750, must correlate with the balance brought down from your control account. And we can see that the balance is exactly the same. That is debtors and creditors control accounts done twice in the control and then second in the individual account.